All right, I'm going to do some cycle analysis on the stock market today. I see this happens basically every time we move down into a daily cycle low, and of course, it's magnified moving down into a larger degree intermediate cycle low. Um, the people start, you know, predicting the end of the bull market, and one thing after another. But this is not the top of the bull market. We don't have the advanced decline line is not diverging yet. We don't even have a Dow theory non-confirmation yet. None of the typical signs that we're putting in a major top are there yet. And as most of you know, I think we still have a melt up, blow off top yet to come before this bull market will end. With the Fed keeping interest rates, basically a zero for way too long and printing trillions of dollars, I just don't. It seems, you know, almost impossible for stocks to top without a final melt-up phase, and we certainly don't have anything. I've noted this before as well, that bear markets require a catalyst. The bear market last year, the catalyst, of course, was that the world lost its mind and decided that closing down and shutting down the global economy would be a good idea to fight a virus. Um, Obviously didn't work very well. The virus continued on its path basically unhindered, and all we did was crash the global economy, put a lot of people out of work, ruin a lot of small businesses, so on and so forth. We're coming out of that now. Economies are opening up. There's no real catalyst to start a bear market yet, and we don't have anything that would qualify, in my opinion, as a final, parabolic bubble top. Um, if we had something like that, certainly that could pop without um, any other existential contributing factor, and then that in itself could start a bear market. But we just don't have that yet. We would need the Nasdaq stretch 40 to 60% above the 200-day moving average, and it's just not. It's about 10 or 15% today, and at the highs, I think we might have been 20% above the 200-day moving average. Certainly enough to trigger an extended sideways consolidation, but not a bubble top, in my opinion. So, as I sat here and I watch people, more and more people start to panic and call a market top. All that's really happening is, and the market's been trying to do this since back here in mid-April. It was trying to move down into a daily cycle low, but we had a Fed meeting here, and so the Fed propped this up, and they continue to pump just billions and billions of dollars into the financial markets every week. And so we're trying to get a corrective move down into a daily cycle low, but all of that liquidity is just making it very tough. Now, normally a daily cycle low will break this cycle uptrend line. We haven't actually done that yet, and there's a chance that we just won't. There's just too much liquidity to get for normal parameters to be met. We may just go sideways. This may completely turn around again tomorrow, and there's a possibility that this is just all we're going to get for a daily cycle low. But I'm not prepared to make that call just yet. Every day that goes by, this trend line rises a little bit, so it gets a little easier to break that trend line. So if we were to get a couple more days of selling this week and break this trend line, then we could complete that parameter. Most 95%, maybe even as many as much as 98% of daily cycle lows will break this daily cycle trend line. Most daily cycle lows will also turn the 10-day moving average back down. And I guess you could make a case that it marginally turned down right here, but this is more or less flat in my opinion. So if we can get some more selling early this week, and go below this 10-day moving average, we could turn that back down. So in my opinion, what is happening here is the market is struggling to put in a daily cycle low, and in doing so, it's having to fight billions of dollars of QE every week. So this is just it's stretching this cycle. It's making this a very difficult process to complete this correction. I've seen some people that are calling an intermediate top, and again, that's very, very unlikely. This daily cycle is ultra right translated. Um, I believe this was day 42 on Friday. More often than not, an ICL will start with a daily cycle that left translates, and by that I mean it tops like on day 20 or earlier. Clearly, that's not the case. So the odds of an intermediate decline starting from a daily cycle that has right translated out to day 41 or 42, the only way that could realistically happen is some cataclysmic existential event happens, like last year, closing down the global economy, war breaks out in the Middle East, something like that could possibly cause an extreme right translated daily cycle to crash and give us an intermediate decline. You'd get some really big 10-15% down days, and you could complete that ICL off of a extreme right translated cycle. But barring that, it's just never going to really happen without some kind of, like I said, existential event happening. So the odds are very, very much against this turning into any kind of major decline. We're trying to complete a daily cycle low, and that is being hindered by the Fed pumping billions of dollars of QE into the market every week. So the assumption at this point is that we probably will complete the daily cycle low, and that the S&P will drop below this trend line sometime early this week. But because it is so late in the daily cycle, this should be over very quickly, and then we're heading higher again. So as I said in I believe it was my last video, we're setting up for a buying opportunity that should set the stage for what I think is probably going to be the melt up phase in this bubble. So once we do complete this daily cycle low, assuming that we are going to somehow manage to complete this cycle correction and break this trend line here sometime this week, then that will clear sentiment. I'm already seeing sentiment cleared in tech. I'm seeing a lot of people again predicting the top in tech, and it's not. We're just stuck in a difficult sideways correction. But at some point, and I think it's going to occur this week, we should get our final daily cycle low, and that'll be your buying opportunity for the next leg higher. And during that leg, I think the Nasdaq will probably give us a sustained breakout above 14,000. All right, so here's the Nasdaq. You can see it's made 2 attempts to break out above 14,000. This one came too late in the intermediate cycle to produce a sustained move, and this one is occurring too late in the daily cycle to produce a sustained move. We get a bottom sometime this week, and then a strong push back up. Then at that point, we would be potentially breaking out above 14,000 early in the daily cycle, and that could give us the sustained move above 14,000 that we need to kick off the melt up phase of the bubble.